Stephanie Link, retail sales worse than expected. Still, like, not horrible. Sentiment higher than expected. One-year inflation expectations, though, high. And then you have Larry Fink a couple hours ago sitting right here on this set. Inflation is going to be stickier for longer. And what cost from all of the things that you hear about from the Labenthals of the world of onshoring? Yeah, great. At what cost? So how are we assessing all this and what it means now for everything, the Fed and the market?
The Fed is not done. After the data this week from the CPI at 5%, and that, by the way, included a double-digit decline in energy prices, which we now know our energy prices are back to last November's levels. So the number next month likely goes higher, I think, right? So that is a problem. Core CPI ex shelter also was stronger than expected. Retail sales, I take exception to it being really a horrible number. Not that you said it was, but some people
I said it wasn't. I said it wasn't horrible.
There are some people that are saying it's terrible. I think you have to look at retail sales on a 3-month average basis or a 6-month, a little bit longer, because it's so lumpy. And a 3-month average, the last 3 months, retail sales rose 1.8%. The consumer's hanging in there, for sure. The Atlanta Fed GDP now at 2.2%, that was jacked up higher. Yeah. And so the point being is inflation is still here. It is still sticky. Right? We all know that. We've been talking about it. And so the Fed probably has to continue to go. And I think that's why the markets are down, because people are a little uneasy that they're going to continue to raise in the face of a lot of other data that is slowing. We've talked about it. Very mixed, right? So I think that's what's happening today. But I think what's really important, Scott, is we're in the 8th inning of higher rates, in my opinion. 8th or maybe even 9th. Right? But that doesn't mean,
I don't know.
even if they
some
get to
games go on to like way extra innings.
It's not going into extra innings.
Well, they may stay. They may stay.
It'll stay. That's the thing. My point is, maybe we don't jack them up higher, much more high. Like maybe it's 2 more times, 25 each. But we're almost done. And then we're going to see what 5% or 5.25% Fed funds does to the economy.
We're already getting a whiff, right? I mean, Larry Fink in the same breath says, I'm not expecting a big recession in the U.S. Not even sure we're going to have one in 23, maybe early 24, but when you have inflation expectations, you've got the consumer still hanging in. J.P. Morgan, and we'll talk about the banks in a moment. Nothing that J.P. Morgan today said with their earnings makes you think that the economy is going off of a cliff. And it's why you have Michael Feroli of J.P. Morgan saying doors still open for a June move. Jason Snipe, Waller, Fed governor, recent data show the Fed hasn't, quote, made much progress on inflation goal. Rates need to rise higher, still much too high. So my job is not done. That's what we're left with today.
Yeah. So I'll say this, Scott. I mean, there's a couple of things for me. Obviously, core, and Steph just alluded to this, core is sticky. Still up 5.6% year over year. The headline 5% year over year, but the piece that Steph mentioned that I think is important is the energy piece, right? So it was up double digits, but we had a surprise cut with OPEC, and obviously oil prices are above 80 now. So that print will look very different next month, and I think these are the types of numbers that the Fed is really focused on. So I do believe they'll move another 25 basis points in May. We'll see what goes on thereafter. We also are expecting earnings to decrease another 6.6% this quarter. There potentially is some more pullback in earnings going forward. So I think that's where the Fed is, and they're in this interesting spot where higher for longer, how long, right? And the market's starting to look to price in 200 basis points of cuts. We'll see if that happens this year.